Are the world's biggest debt markets starting to bust up once again? And why is everybody looking for alternative assets? As we've long speculated on the channel, silver and gold continue to be some of the best investments of this year. And with the US dollar now starting to fail once again, could we be looking at a huge amount of liquidity flow? Well, in today's video, we take a look at the biggest debt markets and why they may be a concern for all of us as investors and traders. Join us as we cover stocks, commodities, and cryptos on everything that we need to know right now. This one will be good. We'll see you in a moment. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. The latest macro, the big key flows, and of course, that data that we all need to be looking at. But what is the most important problem right now? Well, it could be in the debt markets, because as we've suggested in several videos recently, we're starting to see more sellers than buyers in one of the most important markets in the world. And no, it's not necessarily stocks. In this case, it's US home buyers and sellers. Over 500,000 more sellers now leading into this kind of summer market, and the buyers just don't seem to be there. So will we see prices drop? Well, according to the latest data, we've almost got $700 billion of stock on sale. And of course, that is now getting up there with the most we've seen in years. If you load up any of your favorite apps, such as Zillow, and have a look in the US at anything around Florida or maybe even Texas, you'll just see a sea of red dots. And while prices haven't come down yet because a lot of vendors aren't desperate at this stage, what happens if they don't sell by the end of summer during the hottest period? Well, this is something that we're going to have to look at. And of course, if you're interested, make sure to subscribe and click that bell icon down below, because this is something that's going to, we believe, connect very heavily with the stock market specifically over the next 12 to 24 months. Now, where are the smart money traders going? Well, we've long speculated gold, and obviously for the last 2 years, we've been incredibly bullish with two main key targets, $3,000 and $3,600 by October of this year. But could we be about to see it earlier? Well, it looks like silver's starting to play the game as well. And this is a great chart here from Ottavio Tavi-Costa, which basically shows that generally by the end of a good metals run, silver is actually outperforming gold in terms of the metrics and ratios. Now, that has not been the case in 2023, 24, and 25 so far. But with a break above 34.50, this is a huge deal. And while it's selling off at the time of this recording, generally speaking, if it gets a good weekly close this week, we could be about to see one of those epic squeezes potentially appear here in silver. Now, why have we liked gold and silver? Well, this is a gold chart, but you can see here that it's a pretty big deal when it comes to the amount actually annually mined. Gold production really hasn't been going anywhere for years. And this means that, of course, unlike property, which potentially may be more supply than demand, we are seeing more demand by central banks than supply in terms of global production. And as we know, central banks are purchasing gold, and we've also heard and seen them purchasing silver. So it's probably just a matter of time before the second currency, the main hedging metal, silver and gold, potentially starts to rally through even more. According to some of the latest data as well, we've seen Floridians potentially being able to soon use gold and silver to pay for things. Are we going back in time so that we don't use fiat currencies? And of course, also we showed a data recently that shows that you can take gold in China to a kind of convenience machine and literally smelt it then and there for currency. So yeah, clearly there's a bit of a new world here where we're seeing things like Bitcoin, gold, silver start to move into the currency that people are starting to prefer. People losing faith, of course, in the current financial systems. And this is a symptom often of that middle to later cycle. Remember, we've just heard that deregulation is probably coming for the US. And while that's all great for the banks in the short term, it doesn't tend to end very well. Let's now take a look at some of the big key data here. In particular, let's have a look here at the main moves over the last 5 days. We saw gold, we saw metals, we saw anything to do with kind of geopolitical conflict start to rise up. But we also had semiconductors bouncing from being kind of flat on the session to back up by the end of the day. And this continues to really pull through the idea that for now at least, markets do have that leading star, semiconductors and technology. And of course, they're the most two important sectors. The AI boom actually is now expected to deliver a record contribution for the US economy, and it's expected that this will add 1 percentage point to the first quarter GDP. Remember when everybody was talking about the Atlanta Fed, including us, where we said that according to them, they were going to see a decline in GDP? Well, it now looks like AI might be filling the gap. And of course, with tariffs now being reduced across the board and semiconductors being able to be kind of sold overseas, we're starting to see this coming through now. Now the GDPs are starting to improve, and that is just a huge number. I mean, not since the dot-com boom have we had numbers like this in terms of something adding to the US economy. That's just a massive deal. Now, why is this important? Well, of course, it's ending in an equity bubble. I think we're all aware that most of the Mag 7, most of the biggest stocks in the world are pretty large. And of course, if we look at the largest bubbles of all time, you can see here the internet bubble, the Mag 7 bubble, or AI bubble, as many people like to call it, are kind of getting similar in size. Now, are they the biggest ever? No, we've seen the ARK K kind of bubble, which was obviously only a small amount of money in the scheme of things. That was wild in 2021 highs. Bitcoin was also wild at that particular point. But we've also had, many of these over time. China, notably coming into the kind of 2008 period, and of course, gold and silver back in that 70s period. So there's always been another bubble. Are we in one right now? Interested to see your opinions down below. I think a lot of you would say yes. But does that mean you sell the market? Well, according to the latest data, probably not. 1 month forward returns, 2 month forward returns, generally pretty good. In fact, the 1 month forward return, based on what we just saw in May, has historically been 100% of the time. Now, of course, you can't go on a stat and say, oh, wow, it's going to happen again. But that is still pretty good. And of course, at the moment, we're getting closer to those all-time highs, and every dip is being purchased. Flows from Japan equity funds, as we saw, pretty worrying here. On a record flows out, 10 billion plus piled out last week. Hopefully we can get the updated data for this week to see how that's going. And in terms of the two main kind of concepts that we're working on in terms of what are the most likely scenarios, as we've often thought about, we've either got this one, which is kind of like everything's all good, or whoops, tariffs have started to take hold in the markets and taking a bit of an effect. That could happen between 200 and 250. Or we're following kind of the dot-com boom. The real question, though, is which one are we in? A lot of people think we're over here in 1996-7. I think that we're more than likely in these types of ones, though, which have aggressive rallies coming off. Yes, we get all-time highs, but of course, as we know, there are a lot of sellers here that are usually quite smart. And remember, we've got Warren Buffett, who's removed out of some positions. We've also got Jamie Dimon, who sold a lot of positions near the highs. Yes, we're almost back to those levels, but still, he sold near those highs. And of course, we've got many bears out there sounding the alarm on the markets over the longer term. And what about the shorter term? Did we see any large trades? Not really over the last 24 hours. We're still looking for big news. We have had a couple in, of course, the Tesla 2 times long ETF, and the markets continue to fall there. We'll talk a little bit about that later on. And of course, we have a lot of transactions on this S&P 500 3 times levered fund, SPXL. At the moment, we are trading right around the most traded level on that particular fund. In terms of anything else, really, we've just got some big trades that came in on Friday last week. Huge trade on Netflix, biggest ever, third largest trade on PLTR, and obviously quite a lot of movements. And you can see here with the Tesla trade, how that really started to affect the market. We had 2 major trades. We've come back down now to this support. Will we hold it? A lot of people went bullish here on positive gamma. We are still holding the kind of demand zones. And the way that we kind of look at it is we need to see a bounce pretty much around here. Otherwise, we might be going all the way back down. And as you'll see, that could push us into the 280 kind of area for the markets. What about central banks? Well, they came back with equity flows. We saw a big drop last week, but then they were smashing straight back in with a huge amount. We actually saw the world central banks go to a new high, and also the Fed go to a new high. So clearly some funding coming in, some liquidity coming back into the markets. The S&P 500 still hovering around the same zone. Not much to really gain over the last 24 hours other than in general, it's stuck within a resistance range. And as we've mentioned, the reason why that is because we're at the most traded zone. So this area here is literally where everybody traded previously before the big sell-offs occurred. And that's why we're seeing this consolidation. Key levels to watch, 57.50. Obviously, the options high and low levels over the next 24 hours. And if we drop this level, 5,600 or even some of the further gaps below. And of course, if we rally past 5,600, I'd be expecting a new all-time high. So we're at that neutral equilibrium point. And you can see that when you look at a 2-day chart. So let's now take a look at the charts in terms of what's going on with volatility. You can see here clearly over the last 24 hours, volatility did drop, although that may spike now that markets have come off about 0.5% at the time of this recording. And JP30Y is still hovering at that really tough area. We've also seen, of course, the US 30Ys go back above 5%, but unable to hold. And we know that up here, concerns by the banking market, concerns by bonds tend to come in, and we see a lot of vol. Underneath, it seems to be more of a calm kind of before the storm. In terms of regional banks, we saw them kind of hold their own during the last 24 hours. Obviously, if we do see deregulation, we expect them to improve. And financials, you can see here, ended the day slightly positive after selling off a little bit. So again, they're near all-time highs. And this really tells us that we're still in a relatively healthy market in terms of debt. Because if we weren't, then you'd usually see the financials starting to crack up. The market that we are watching very closely, though, has always been home builders. And obviously that one, if you're a bear, really doesn't look good. This is an early warning sign often for economies, but it can take years. And I repeat that, it can take years for it to come through. So this is something we saw a long time ago, and it took about a year and a half, and bad things happened. Remember, you do want home builders going with the trend, and they're just not doing that at the moment. And that is certainly a warning sign if you're looking at the longer term. US dollar has weakened after that really nasty weekly close, and it's back down here at this last level that it could hold. Now, if it doesn't hold this zone, there's really not much holding up the US dollar before 96, 95.50. So we could be seeing a big fall in the dollar. And as we kind of have alluded to this year, we're bearish on the dollar for the year because of several geopolitical risks and other things. And that seems to be playing out pretty nicely. What about gold? Big rally here, broke past that zone we spoke about in the weekend video of 33, kind of 28, 30 zone. It went up, it hit into almost 3,400, and now it's doing a bit of consolidation. That was a large move. It's not unexpected to give up a little bit of the gains, but as we saw, silver outperformed gold. So if we actually load up a silver chart, this is where the big action happened. And we watched this live during our Monday live show that we do here on YouTube. And obviously, if you want to join our private community, links in the description down below for that. So you can come and join us on Tuesdays, Wednesdays, etc. But this was a huge move, and it's something we've been looking for a while, a 3450 plus breakout. Now, you might say, oh, well, it's selling off. Shouldn't it squeeze straight away? We have closed before at 3450 before, but we've never done it on a weekly. And this is, I think, where the big kind of fight between the shorters and the longs are going to be over the next week. Silver, though, looking very tasty in terms of a potential big squeeze here. What is your target? We asked you guys during the live stream. Some of you had $50. I'm thinking 40, 42 could be a pretty good target if we do start to see silver going hard. What about Tesla? Well, it came down and it rallied. So it barely rallied. It held off that low. I'm sure a couple of you were looking at that 3.30 area. We'll update with options in our next video on what's going on here. But generally speaking, you've got a lot of 330 puts, and you have, of course, a ton of 350 plus calls. So yeah, we're kind of in the middle of the zone, but this is a good sign. Maybe take out previous day high. That could be a really good sign as well. Get back into 350 and then move up. So certainly an interesting chart here to watch for Tesla. Bulls will not want to see that low taken though. So under 330, not so good for Tesla. Could push into a 280 at that point. Nvidia holding its own as well in a good level. So that's good. We're looking for that 148 break in the future. If that does happen, could be going to 165, 170. And US oil was, of course, the talk of the day, but no breakout past 64.50. So no real break in that area. One of the stocks we've been looking at recently was down, which is Google, and it kind of just consolidating here. Of course, there are concerns about governments getting involved in this one, and that is really the main problem for Google. It's certainly not fundamental valuation. What about HSI? Chinese market came back pretty strongly after dipping pretty hard. I would have liked to have seen it go to 22,000 at this point, but if we get now past 23,500, that's going to be a good sign that we are moving towards those highs that we saw back in March. And we continue to see a lot of stimulation from the PBOC. So really, China still looking like it's a central bank-driven market, and that obviously is not a bad place to be. if you're looking at the medium term, because when they stimulate an economy that hard, it tends to flow through. Russell 2000 still looking like an inverse head and shoulders, no breakout. Russell 2K will be the biggest beneficiary of deregulation due to the companies not really making money in it. So this, of course, is a key level. 210 to watch, no breakout at this stage. NASDAQ, similar thing, kind of up, down, all around. No real movement here, although the trend still does remain bullish because, of course, we can see here each dip has been purchased and there's no signs of a lower low just yet. So we'll update if that does change. But for now, the bulls are still in control. And Bitcoin holding its own, but unfortunately not getting through this previous high. So Bitcoin bounced off the 104. If you bought that, well done to you. But it wasn't able to get through that 106 kind of 5 level. And you'll notice here on the daily that really this was a huge daily candle rejection. So again, I'd say there's quite a lot of dip buyers here. But with Bitcoin, because of the amount of options that were in there, the markets may stabilize for a little while longer, and that is certainly a possibility. This week is really about one thing and one thing only, though, and that comes back to the jobs numbers. Jobs numbers on Friday, non-farm payrolls. This is now arguably the number one or number two most important data point of the month, other than tariffs. So, of course, we'll be looking to see whether the US economy is starting to struggle. People will be certainly looking at over year-on-year growth or year-on-year weakness in the jobs market and what that means historically. And of course, this is something we will be watching very closely. We do have a bunch of other central bank conferences and stuff, but it still just matters about the US. So of course, make sure to watch that and also make sure to check out our other stuff. Over on X, join up for our newsletter. And also, if you're interested, follow me on LinkedIn as well. I'm posting a little bit more there this year about things to do with psychology of markets, improving your abundance mindset and all sorts of things like that. So I've got a new post coming in a week, so make sure to follow me over on that one. Thanks so much for watching, guys. I hope you have a great day, and we'll see you in the next one. And let's see what happens with the potential of the silver squeeze. Bye for now.